A fire at home can leave you with a hefty bill. Insurance can help, but buying too little and buying too much both have financial consequences. So how do you work out what's just right? In Singapore, most homeowners have fire insurance by default, as it's required by HDB when you get a loan, as well as by most financial institutions. It's valid for 5 years and costs just about $2 for a 2-room flat to over $5 for a 5-room flat. But it only covers the repairs of the 4 walls of your house. It does not cover the contents of your home or the cost of renovation. That's where home insurance can come in.
It actually goes beyond just giving protection to damages, repairs for buildings. It also allows homeowners to decide whether they want to get insurance for the renovation that cost that they've put into, as well as the home items contents like the sofas, TV, sound systems that they've acquired or they've placed in their homes.
Home insurance includes cover for other situations like burst pipes or flooding. It typically covers the cost of alternative accommodation while you renovate your home. It also protects you in the event that a fire at your home damages your neighbor's property.
For example, a 4 or 5 room flat, you pay as little as $7 a month to get proper coverage, adequate coverage for your building structures, some amount of renovation, and a decent amount for home contents. You pay less than $100 a year, and that gives you a fairly comprehensive coverage for a 4-room or even a 5-room flat.
A more expansive version, known as all-risk insurance, even covers accidental damage such as shattered glass, but it's not necessary for most people.
Many of us would only want to ensure that, in the event of a big fire, catastrophic event, majority of our home is damaged. We want to make sure that we have adequate cover for that, because the amount to repair and replace could be quite exorbitant. If you do possess vintage or antique, where values are quite high, paintings as well, where you want to have special coverage for it, then I would suggest and propose for homeowners to go for the all-risk policy.
With so many policies on the market, how do you choose the right insurance for you? There are several factors you should consider to estimate how much it will cost to reinstate your home in the event of a fire.
First thing first, definitely is the square foot of the house, right? Secondly, you have to look at how much you have actually put in. For example, to build in a kitchen, to put in fixing a wardrobe, how much would all this, how many do you have, and what is the amount that you already put in, right? So you just imagine in the event of a fire, you need to replace this because this is damaged. What would be the cost of replacement or reinstating the situation so that it's become back to where you are inhabiting it as now. And you're still unsure, definitely there's professional services in the market that you can engage and tell them to do a valuation for you.
It's easy for you to maybe go to each room and say, okay, how much did I spend on, let's say, bedroom 1, bedroom 2, and just do a sort of a summation and typically account for the small items. You can just do an estimate. We don't require an itemized amount unless the homeowners actually possess very high-end home contents.
It also matters whether you live in the house, rent it out, or are a tenant.
So for a home occupier, of course, you will want to make sure that all the possessions that you have in the house is adequately covered. Whereas a landlord, typically, because he or she does not reside in the house and is being rented out, they may just want to get coverage for the 4 walls, for example. And then again, tenants, for tenants, they may just want to get coverage for home items that they have.
While it's important to be adequately insured, the most expensive policy is not always the best one.
The impact of over-insurance is always about you are paying something that you will not be able to claim for. So for example, I pay for the premium that's covering a building of 200,000, but actually the cost to reinstate the building could only max up at 150,000. So the 50,000 you will not be able to claim for, but you're paying for it.
On the other hand, under-insuring your home, either unintentionally or to save on your premium, could result in a bigger cost in the event of major damage. Take, for example, a home insured for $100,000. If it turns out that the cost of reinstating the home actually is $200,000, the insurer will prorate its payout because you are 50% underinsured. So you'll only be able to claim $50,000 instead of the $100,000 coverage you paid for.
And then that will the total amount being paid out. So homeowners will be sometimes a bit disappointed because I thought, I should get the full amount based on what I have lost.
Not all circumstances are covered by insurance. Some common exclusions include acts of negligence. This can include fires caused by PMDs.
A lot of insurance companies will put a clause that says that if you have illegally modified the batteries or resulting in so in those cases insurers have the right to decline your claim. But if it's just a normal PMDs that you buy and during charging it actually causes fires, home insurance policy will respond.
To get the most bang for your buck, consider multi-year plans which can lower your annual average premium. There are also renewal or loyal discounts for staying with the same insurer. Remember that homes that are already fully paid off are not legally required to have fire insurance. So it's up to homeowners to make sure your home is covered. And one final tip that doesn't cost a cent.
Please save the 24/7 loss adjuster number and the customer service number on your phone. Because under such a critical scenario, nobody will be able to think through things on a more systematic way.